All right, folks. Good morning. Everybody's up in frozen tundras, about 80 degrees outside down here in beautiful God's waiting room, Boca Raton. Hope everybody had a great weekend. I had a good weekend hanging out with my boy Jack as Keely and Susie were up in Atlanta for a cheerleading competition. And I think we have a normal week ahead as opposed to, well, this isn't normal, 10 o'clock. Actually, in the old days, we used to do 10:30 or something like that on Mondays was weekly options. We moved it to 1 o'clock just because, the first hour of the trading day is usually amateur hour, and the price action usually isn't indicative of what's going to happen the rest of the day. So we moved it to 1 o'clock. But of course, my follow-up eye doctor appointment is at, 2 p.m. down in Miami, and that's a haul. So my apologies, but thanks for the flexibility. I think we have a normal week scheduled with full throttle training. The full throttle training that we did last week is on the webpage. Obviously, you can go and watch the two previous sessions underneath full throttle. You guys can hear me, right? Hopefully I have 9 other people saying they can't hear me than just Benoit. So obviously it's Benoit's issue. If somebody could type that to Benoit, I'd appreciate it. There are the full throttles from last week, session 2 and session 1. And it's always good to have some of the veterans say, hey, man, I learned something more this time, and they've been here for years. So if you think watching these only once is good to go, you're wrong. You got to keep watching these full throttle sessions, and we'll continue with them this week. I'm going to put the links. Still need some more money to raise here, folks. Remember, I'm going to lower your next annual membership down by the amount you donate. We still need about $7,000 or 6,500 as a team, and just over $1,000 here as my personal team goal. So, all right, let's get airborne. Obviously, we'll talk about the rally here in a second, which I believe is going to fade and we should sell into. But I'm going to give a strategic brief. And since we've been doing a lot of joint briefs lately, the weekly options and primary, we'll cover a lot of the positions that are in there. The burner trade is looking phenomenal today. It's up $6,300, the burner trade. So you ready? Close it. So if you need to take the profit right now and run, when I just did the math, it was up $6,300. The long calls and the bull put spread, get out of the burner trade. These calls are up $3,000. The FX, if you just did the straight March 1940 calls, they're up $3,200 before I jumped on the air. So 2 weeks, $3,200 in those calls, $6,300 in this burner trade. That's only $900 short of the max profit. Actually, I'm sorry. It's actually above the max loss. I mean, the max profit technically was infinite because we had long calls, but it's up $6,300. So if you're sitting here and tune out for a second, I'd close that right now because this rally is going to fade by the afternoon. We're going to sell on the news, in my opinion. But this is really sad. We'll talk more about this in the No Kidding primary live trade brief tomorrow. But the Vale and the dam thing in Brazil just gets uglier and uglier. Very sad, very sad. And what happened with that dam? EWZ has already taken the hit of EWZ of this and the people getting arrested and stuff like that. So a little bit of that's where that was, the arrest. And a little bit of a recovery out of EWZ. So happy with what's going on with EWZ. Not happy with a Brazil dam break and people knowing about it. Here's obviously why the market's rallying, and doing it over the weekend, making these type of announcements. The market's going to do this, right? Trump to delay tariff increases on Chinese imports. He tweeted this out yesterday. If you're not on Twitter, don't. But anyway, he said it out on Twitter. And he telegraphed this, folks. We all know that, or if you were here around when they were down at the G20 summit, I covered this. I said, hey, this 90 days I use the words physically impossible. I'm like, we will not get a trade deal in 90 days. This was the president more or less, and he even called it an artificial deadline. It was more of a time frame to find an agreement for an agreement, right? A structure. And it's good. I'm seeing headway on the negotiations, so we're going to, we're going to let it slide a little bit. I'm I'm moving officially from you ready for this? You guys have been with me for the past couple weeks. I'm moving from a 0.5 delta to about a 0.7 delta that we're going to sell on the news. I absolutely am. I'm better than 50-50. As a matter of fact, a 0.7 delta that we're going to sell on the news here, especially after doing a lot of talking this weekend to folks. Everybody else is feeling the same way. The Chinese aren't. Chinese stocks soar into bull market, excuse me, on massive volume after tariff deadline delay. I think one of the reasons the president announced this on a Sunday and Sunday afternoon is what? The Chinese market's open our Sunday night, and he's given a little bit of a love there. So look at that; it's up even higher so those calls and that burner trade's up even more than what I thought because it was only up 1.5%. So look at that, man! Look at the gap up in FXI. Here's where we put on our burner trade right there, and we are right here. It's up 7%. And if you got into the Jan 21s, like I told you to a while ago, you're printing money. We're getting out. Get out of all of them. You got to sell on this, baby. This is a massive pop in FXI, and I think it's going to be short-lived. Cyclical stocks. Resurgence in cyclical stocks pushes Dow Industrials towards a new high. GE having a nice pop today, getting into healthcare or something like that. Very, very funny not funny, but people say they don't have losing trades. Warren Buffett lost $4 billion last week on Kraft. And this morning he's doing an interview with one of his girlfriends. Weird girlfriend. He's weird. He's got like some weird relationship with that Becky Quick girl. Her cousin worked at the Options News Network for us, but very weird. Dude's a little strange with stuff. He says he overpaid for it, but he says I'm still keeping it. But there's a man taking his medicine in public. Hey man, had a losing trade, and but we're not dumping it. So so we had about 4 or 5 or 6 Fed lieutenants running around on Friday, which was pretty interesting. He's the Atlanta Fed chief. Said the central bank's policy should let the U.S. economy stand on its own. That's an interesting. I love the way this guy said that. More or less that there shouldn't be a Fed put under this market. So, ladies and gentlemen, as I said, the Fed usually comes out, they did the minutes, and the lieutenants usually run out to a bunch of microphones to counteract what the market reaction was. They usually gauge it, right? Hey, the market was pretty euphoric after we came out and said the market should stand on its own. Yeah, that's not after we said, we're going to be patient. Well, man, equities are getting really overvalued here. Maybe somebody should go out there and he actually said we're probably going to get one rate increase in 2019 and a couple the year after. So this is interesting. This was rather hawkish. And we're not seeing it in the market right now. Obviously, the headline today is the president delaying the tariffs, and we have good negotiations. And he did say, what? I want to meet President Xi in a couple weeks. Everybody heard that, right? Right up the street. I don't know if Xi would want to meet in the United States because, diplomatically, that kind of looks like, hey, I'm coming to you to kiss your ass. But I think that's what everybody's trying to get aligned towards. But this is, I think once the China thing kind of wears we've been in the back of this hot car for a year driving to Disney, and we keep saying, are we there yet? And Dad Trump keeps saying almost. It gets old. So I think we have trade war resolvement fatigue. I think this headline is going to rear its head later in the week or eventually. Like, hey, did everybody hear what this one Fed chief said? Market needs to stand on its own, and we need to remember, folks, the market's kind of pricing in nothing for 2019. Remember, and some market participants are trying to even get a cut. So this is I'm saving this headline because the chickens are going to come home to roost here. How about this, man? What crashed over the weekend? An Atlas Air 767 landing in Houston. What was it flying for? Amazon Air, folks. It was an Atlas Air aircraft, but Amazon Air is flying their asses off, folks. This goes to this is horrific. You guys knew I flew for FedEx, couldn't stand it. Not a nighttime package guy. So only 3 people died. Obviously heartbreaking. Amazon Air, formerly known as Prime Air. 3 people, 2 pilots, and I think somebody on the jump seat. This is terrifying. They were at like 6,000 feet, and at 7,000, the next minute later, they're in a lake. Catastrophic. Somebody, I saw a report that they have like surveillance footage from a parking garage or something like that just shows the plane in a steep nosedive. I don't know what structurally could happen. I hate to even speculate, but it could be a human factors issue, as in a suicide. I just don't know. This is awful. But Amazon Air, ladies and gentlemen, it's Amazon Air. As Amazon just kind of keeps moving sideways, man. It's interesting. I haven't seen Amazon this range bound in a long time. Amazon just ain't a range bound stock. That's VXX. Like, that is not Amazon. So look at this. Rip your face off, tear. Gave some of it back with all the world ending. Triple bottom here off the bottom of each Keltner channel, and then just sideways. This is crazy consolidation. We'll talk more about Amazon tomorrow because we got to get out of FXI and stuff like that. Let me finish my brief. Losing trade for Buffett. Everything's overbought. Right here, folks. 28.08, I think it is. Look at this. Look, and we're literally there. I think 28.08 is the high right there. We are at here's your formal trumpets playing. We are literally at the quadruple top. Okay. Now, I have zero interest in being bullish at a quadruple top. This thing, you can feel it overstretched. Look at that. It is simply overstretched here, man. We talked last week about the everything is overbought indicator. You name it. Oil, treasuries, gold, equities. Right? So it's everything is overbought. Well, guys, no. I wouldn't. I was talking about FXI. Thanks, Samara. No, Jan 21s are all solid. Remember, folks, a lot of the Jan 21s that we're in. Look at CSX. Does CSX look like the S&P 500 for the past year? No, it's ignored. And look at this run, man. CSX is phenomenal. So no. Remember, folks. So look at CSX up here. Look at the S&P 500. It has significantly outperformed the S&P 500. A lot of the Jan 21s we're in. I don't remember, folks. This is as I predicted, we're going to have more of these type of things over out here, right? I don't think we're heading back to these December lows. If anything, these come back into play, right? The moving averages, the 200 to 50. I think we trade down to these and around to here. The only way we really get down to here is if the Fed does come out and say, hey, ain't just one this year, but, economy is really overheating up, 2-3 interest rate increases. Then you start talking about this shit. Or, Bill Blaine had a great note this weekend. He's a, did I bring that one up? He's a friend of the president. And he said, and I kind of agree with this. He's like, now we know how the president negotiates on trade. This is, he just gets a series of base hit. Yeah, here you go. Markets now perceive a clear pattern to Trump's approach to trade negotiations. So, let me give you the cliff notes. It's a sell on the news type of thing. He believes that sitting in the Oval Office, the vice premier saying, hey, Mr. President, I have this great announcement to make. We're going to buy, 10 million more in soybeans or whatever the hell the guy said. Trump's like, yeah, huge. What? Who cares? Yay, soybean farmers. Nobody cares. What about intellectual property, the forced transfer of technology, the government subsidizing businesses? Bill Blaine nailed it. Look at this. We're up over 2%, guys. Let's start managing this FXI trade. All right. How many of you got into the long calls? Let's take a look at these. The FXI March 19 40 calls. Look at these things. Let me close the. So remember, I said put these on. Let's take a look at what the 40 calls are up. 15 of them. March 19 40 calls. I know some of my coaching clients did. Calls. Hello, calls. Look at that, $5.20. What was mid market on these things? $5.20, $3.20, $3. 3 times 15, $4,500 in profit in these calls right now. Close these for these are straight calls, guys. Look at this, $4,500 on a straight call buy. That takes care of that SDS shit sandwich weekly options trade. So edit. Let me say close these calls. Wow. Oh, did I do that wrong? $322. $3,000. $3,000. Thank you, Frank. That's my political science math. 520 minus 3. Yeah, you got it. Thank you. Yeah, exactly. No. I appreciate that. I didn't buy the straight calls. So, what's this? So I did the burner trade, which is doing even better. 225 update. Close March 19. And I close them now, guys. 40 calls at 520 if you can get it. What's that, 3,000? 2 weeks. That's nice. Now we'll take a look at the burner trade. Greg, you're exactly right. So market up, VIX up, something's up. We are at the quadruple top, and I'm actually looking to get a little bearish here. So now let's take a look at the burner trade. Let's take a look at the burner trade. We wanted to buy. Was it fifth? Let's pull up the burner trade. How many of you are in the burner trade? So the 44 calls, 50 of them. Buy the 44 calls. Okay. We wanted to, let's just throw the whole burner trade up here. So these let's just do the math individually so we can step through it. These are $1.55. What did we get into these at? 63, $1.55 minus 63 times 50. So wow, $4,600. So these calls are up $4,600. The $4,600 profit in the 40. Hang on, let's just leave this over here. The 44 calls. So the 44 calls. Haven't done a burner trade in years, so let's just break the math down for everybody. And then let's see what the bull put spread's up. The 42.5, 44. And I'd probably close these like this, folks. I'd leg out of it. I close the bull put spread and then the calls, I close them separately. We're at 4 cents. This is 42.5. That's 96 minus 77. Oops. What's that? 19 cents? 19 times 4. I'm sorry, 15. 15 times 130. 130 contracts, 15 times 130, 1950. So the bull put spread is up 1950. And this is the bull put spread. Very nice trade, man. $19.50 plus 4,600. Wow, $65.50. There's a burner trades, folks. So this is an example of what a double vertical would have looked like, but we didn't do because I didn't want to put a cap on it. So this is good initial burner trade right out of the gate, $6,500. Let me put that in there. Exactly, mock money. Yeah, the speed of heat. my legging out of calls and spread separately for 65.50 profit in 2 weeks. Did anybody do the like I said, do the calls and the burner trade? Very happy. We're gonna do more of these, man. It's not separately. Yeah. Update 225. Very, very cool. Elaine, I didn't see that one. Jeff, you did both? Nice job, man. Very well done. That's right. Yeah, we talked about that. I gotta shoot you back about, I think you're looking at Friday for coaching. I gotta take a look. All right. So, hang on, so very, very happy with this. Hang on 1 second. Okay, Dow's up 107. So very, very broad market rally today. But as somebody just astutely mentioned, the market is up, and the VIX is up 2.5%, ladies and gentlemen. So we're going to have an Obama teachable moment here. Market up, VIX up, something is up. What is going on right now? And I'm missing an institutional call to be on here, but I guarantee they're talking about this, is what I led with, a quadruple top. So the large institutions who are long, right? We have a lot of longs. We got our CSX, Raytheons, MGM. Let's take a look at real quick. Let's go back to what we did last week, because it was a joint brief. We looked at Amazon. How did anybody make out with Amazon last week? John, I know you got squeezed, right? It pinned at the 1640 last week. How did everybody at least do if you got into the bull put spread? Most folks couldn't get into the iron condor. I got into the higher one we talked about in the brief. But Amazon looked pretty good last week. But let's take a look at MGM. MGM's having a nice little. So as we talked about, MGM's going to pop on what? Look, over 2% gain today. So this bull put spread we did last week should be really, really looking good. At 27.5, 27. And I said I was comfortable going out a couple weeks to March 22nd. But what I might do, even though this isn't a PLTB portfolio, a couple things. That's up about, what did we get? Oh, it's even. All right. So if you didn't get into this MGM spread from the joint brief last week, this is good. And I'm going to look to leg into an iron condor on this. I am going to put a cap on this. I thought you weren't going to put any cap on stuff in front of a trade deal. Man, the trade deal's in here. I truly think that we're probably going to give some of this back. There's just the Fed's done, earnings are done. Trump keeps saying, remember what happened a year ago? Folks, remember when, and we're heading out to Aspen for spring break again, but I remember last year out in Aspen, I tried to take a week off, and that's trade war, and Mark Zuckerberg's a piece of shit happened, which was awesome. I actually had a great time. So we're oh, John, yeah, I just got your text. We'll talk about that. Okay. But, yeah, the trade deal cookies are done. Let's talk. I'm going to talk about, since we are in weekly options and we don't have PLTB folks in here, let's take a look at the and some of you are going to fall out of your chair. I think somebody asked me last week why I haven't traded SPX in so long. And the main reason, folks, that I haven't traded, we used to trade SPX weeklies like you read about in Trading SPX Weekly magazine. The main reason is this. I mean, it's the S&P 500 is extremely volatile. Let's take a look at the at-the-money straddle for the S&P 500 for Friday. And what this is it's been a slow, kind of gentle climb back up here to 28.08. And I'm going to talk about an aggressive trade would be to sell into this. would to be sell. Let's go. Let's see what the straddle's pricing at. Now, we don't have a 2807 strike. Okay. That's literally in between 2805 and 2810. Let's do some political science math here. Let's see what the options market is pricing in a move to be. About $55, so 110 wide. So, wow, that is a massive straddle. Wait a minute. That's got to be wrong. What expiration do I pulled up here? I want to look at March 1st. That's what it was, idiot. There we go. That makes a little bit more sense. Make sure you have the right weapon under the trigger here, guys. That made no sense, that straddle being that wide. Did I have that? No, these are the March 9th. Why do I click up on top? This platform sucks. So $60 wide. That's about half as much as I just looked at. So 28.34. So you see this little TP up here, if I can culturally appropriate from Pocahontas, the 28.34. 50. So the at the money straddle with a 55% should be around 58% probability. Remember, we're not right at 28.0687, so the straddle's off a little bit. But the options market is saying, pricing in with about a 0.6 delta, that the S&P 500 is not going to be above 28.35 by Friday. Okay, so let's talk about, and I probably don't think there's too much alpha in there. Maybe to 28.30. This is, I wouldn't do that one. Whoops, other direction. Let's look right at the 35.40. That's $1. So let's look at this, folks. This would be an aggressive trade. Well, geez, look at that. 76% probability. Yeah, I'm probably not going to do this. I mean, that one is risking 57 to make 18 with 72% probability. Here's what I'm feeling around, guys, but here's the issue. Here's why I personally wouldn't do this, is when we hit these moving averages, this time we had to pop through it. This time we didn't. This time we really, we didn't. So I'm a 50 delta as to, we usually, if we hit a moving average, we usually do what? With some serious airspeed, either up or down. These we've kind of not. They've just kind of been half-assed, attempts. So 2800, 2800, 2800. Here's why I'm bearish for the week is, what's the president going to do now? He already said yesterday, I'm sliding the date, and I expect to meet with Xi and get a deal done in a couple weeks. What's he going to is he going to say that Tuesday through Friday of this week? There's nothing really. Hang on. There's nothing really on the flight schedule this week. But I don't want to do a bear call spread on the SPX for the week because, well, housing, building permits, housing starts, the Case-Shiller, the conference board. What's Powell doing? Oh, it's the Humphrey Hawkins this week. You know what? Everybody stop. How did that slip my scan here? This week, no, it's on my kneeboard. It's on my note. No, Humphrey Hawkins, guys. What I'm getting at is I'm itching to sell into this pop at this 2,800 at this quadruple top, but I'm done. We're done. We're not doing any weekly trade this week. So annually, semi-annually. Yeah, there it is right there. Semi-annually, it's called the Fed chief comes and testifies for 2 days in front of the. You guys remember these when Ben Bernanke was the Fed chief, right? The Scotty. I'm giving you all I got, Captain. And this is now we're going to see like Ocasio-Cortez, occasional Cortex. Ask stupid questions of the Fed chief. So no, 2 days of testimony, and we get GDP this week. So no, it's going to be an extremely volatile week. I feel if you're an aggressive trader, I feel a sell on the news. Okay. Yeah, never mind. No, I already talked myself out of it. Nothing this week. This is a huge to steal the president's. No weeklies. If the only thing I'd look at, and we'll talk about this tomorrow in the and the PLTB would be a bear call spread on MGM to leg into an iron condor. I think MGM with a nice 2% pop today, we could leg into that March 22nd iron condor with a bear call spread right up here. So we got our bull put spread on last Tuesday. Let's look tomorrow at a Kevin. It's a good point. All the weekend shows said no, it's not this week. Maybe the next week or the next week. And that crazy Adam Schiff is already saying he's going to move on to another investigation. It's crazy. North Korea, I think, is baked in here. I don't think the market's going to move on that. They might announce the the end of the Cold War and stuff like that. But it's you bet, David. Yep, good looking trade. So yeah, Patrick, this is a lot. This is a lot to digest this week, and I'd be throwing darts. I don't throw darts. I feel a bear call spread eventually, or to get bearish, just because everything's in here, guys. I just don't. I think the next rally would be off of Q1. You ready for this? Q1 earnings. Well, aren't Q1 earnings going to be, kind of soft? Maybe, but their forward guidance can be more clear if we have a trade deal, right? If we have a trade deal, Q1 earnings calls, people can be what? Hey man, future looks great. We finally have resolution on the trade deal and the numbers look good. So that would be, I think the next trade deal rally is based on earnings, right? So a lot of mumbling, but what I'm getting to, if you guys want to hear my mindset, is not to be putting a lot of capital to work right here. Stepping in front of it and getting bearish would be very aggressive. And the options market will pay you to be aggressive. I'm just not. I would not do that in this portfolio. It's a little too aggressive, Maverick. And I ain't no Maverick. Iceman. He's right. He was unsafe. So with FXI up here, let's go ahead and do it. Tamara, no more government shutdowns. Yeah, they already did that quietly. That Mitch McConnell and the Republicans caved, and we're done with all that stuff. So hang on a second. Hang on one second. Let me. Okay. Yeah. So, I don't manage the burner trade today. Leg out of it, guys. Looks like everybody's happy with that, and some significant profits. It's our biggest winning trade in a while since. So we'll use those some more. Everything else is looking good. So let's not. I'm not going to get bearish on SPX. I was thinking about it. I mean, we've kind of started giving a little bit back of the rally at the open. Like I said, I usually don't. The reason we moved weekly options to Monday afternoon is because the first hour of trading from 9:30 to 10:30 we call an amateur hour. Don't believe any of the price movement in the first hour. It's usually the afternoon trading that determines where we're going for the rest of the day, and more or less sets the tone for the week. So if we give this mass, this is a gap move at the open. That's obviously a gap. So we got to see if this holds. I don't think it does. I think we sell off. I think we give at least half of this rally back. So I wouldn't. Let's not do. We're going to sit on our hands as far as a weekly today or this week, and we're going to watch. Even Amazon. I think Amazon not. Hang on. Not Raytheon. And Raytheon's, we talked last week about closing those front month calls. That's a good climb schedule. This is a tear. So the 180, the 187 and a half or whatever they were, or the 185 calls or something like that, the short calls you need to be out of in Raytheon and just enjoy the ride. Raytheon's just going to keep gliding higher finally after its near death experience. We're almost to the 190s, guys. We're almost back to remember, we were selling 200s, 230s, remember we were selling short calls at one point all the way up there at 230. So Raytheon's back. Here's an example of sticking with it, man. When you're in a Jan 20 or something like that that's getting pounded, sell at the money or in the money short calls and bear call spread. You can make money if something's going down. So when it gets back up to where you got into it, you're printing money. So there's an example of, hey man, this long that I'm in, it's getting hammered. Well, do you think in a year and a half, 2 years, it's going to be a hell of a lot higher? Yeah. Then you stay with it and you make money. So that's a nice turnaround story with Raytheon. We'll talk more about that tomorrow, as well as CSX. Hopefully everybody who's relatively new has gotten into their longs. CSX has been the gift that keeps on giving here. And very, very happy with that. And MGM, we'll talk about MGM tomorrow. Everybody should be out of CME. We talked about CME last week. It's just my commit criteria changed, and that's just not that's a descending kind of descending, and definitely get out of it today with it being up 1%, and use this opportunity to get out. And Brazil's been nice. We'll take a look at our iron condors tomorrow in Brazil. So, all right. So, guys, we'll keep to our 35 minutes here to weekly options. Manage your FXI. Somebody sent me a private note there. Rebecca, I wouldn't get bearish on FXI. I mean, this is – I will get bearish. How about this? I will get bearish on FXI. Let this run. And then there was a lead article in the journal today about just how bad the Chinese economy is. So I think, and last week the PBOC had a massive injection of liquidity right here. They had a massive pump of liquidity. Who was I talking to last week? Coaching. The PBOC dumped a boatload of, kind of like our Fed open market, FOMC, the plunge protection team, we called it, the PPT, jumping in and buying equities. So the FXI is on a tear. So what do we do when something's on a tear? You either join it or get out of the way. We joined it back here with our burner trade, and now it's time to get out of the way. So Rebecca, yes, I would get bearish on FXI. Not right now, man. It's just, that's why, I feel I don't mind missing a trade by a couple days. Like, for example, if we're going to get bearish, I'd rather wait and miss a couple points and then join it than be the first dude in line. You will get paid for being the first dude in line and taking that risk, and then it might hurt if you're wrong. So I don't like throwing darts. We're not going to do that. So, okay. All right, guys. So let's do that. Let's sit on our hands for weeklies, because there's a lot going on today. Now, David, what time did we have for? I'm going at 1:00. What time's our coaching session for? I saw your email just now, and I can. It should. I should be back by mid-afternoon. Well, what's that? 3 with us? No, David. Let's try and keep that, man. I should be able to do it. If not, I could definitely do it on the phone, and we can talk. So let's keep it. Give me a call on my cell phone, David. And if I'm at a computer, we should be good to go. I'm bringing my computer to the eye clinic. So, but yeah, let's keep that, man, because I don't like moving on you. So, all right, guys, good session. Very happy with the $6,500, $6,600 potentially in the FXI trade. We learned a good new tactic. We kind of figured that one out together. I did that in the past where I'd have a bull put spread on something and I'd like it even more and just buy some calls. I just really never put them together and looked at them as one trade. So hopefully everybody had a great FXI trade, a good Amazon trade last week. At least the bull put spread and the bear call spread we covered in the brief was good. But I know, John, I just saw your text about what Fidelity did to you and making you buy, what was it, 500 shares at the open Amazon? We'll talk, John. If it's a busted trade, if you think that they screwed up, John, you need to file a complaint. And as we talked about, brokerages don't like complaints, man. It goes against their, every year the Barron's ranking, and if they have any open complaints that you feel you got screwed with price or they just didn't do what brokers have fiduciary responsibilities, guys. If you ain't happy with what's going on with your broker in a trade and you want a trade busted, they do not. They don't want you. They don't like that. So yeah, and we'll talk about MGM tomorrow. So I would have expected a bigger. Well, we were up 2% on MGM, a bigger pop. So yeah, your homework, or if you want to get in early, would be to look at a bear call spread and leg into an iron condor in the PLTB portfolio right here up at 29. Yeah, 29. Oh, I should have done it when it was about 19 cents. And hell, no, 19. 29, 29.5. So there's your homework. If you guys want to start working that and selling into that, that'd be good to go. We'll cover it tomorrow. All right, guys. Have a great rest of your day. Happy hunting. Make sure you hedge. I got to go do the sit rep and then go fight Miami traffic, and then I'm done. I think this is my final. This is my final eye appointment. This is my last follow-up. So really happy with that, and we should have a regular schedule. Okay. So I'll see everybody normal time tomorrow at 1 o'clock in the primary live trade brief. We'll do full throttle tomorrow night with a glass of Pinot Noir at 7. And David, I'll talk to you in a little bit. And Deb, if you're in here, I moved ours to Friday or to tomorrow per your email. Okay. Yeah. And if you're interested in coaching, guys, just shoot me an email, Wiz@Topgun Options, and we can talk about individual coaching. So, all right, guys, have a great rest of your day. God bless. I'll see you tomorrow.